Welcome, everybody, to the Lawyer Show. I am your lawyer, Jeremy Rosenthal, and I hope you guys have been doing all right in my absence. The Lawyer Show, well, I talk about it every time. It's for lawyers, about lawyers, with lawyers, and those who are lawyer adjacent. Today, what I wanted to kind of talk about first before we kind of get deep into this is the world is coming back. The practice of law is coming back, at least for criminal cases. Courts are requiring us to be there. They're being their good old kind of angry selves. Where are you, counselor? You need to be here. You need to do this. You need to do that. And so it's been my goal to keep doing this podcast, to keep going forward, to keep bringing everybody the truth, to give the message, right? And it's been encouraging because I know people have been at the courthouse. Folks have been telling me, man, I catch your show, and are you going to still do that? And by I catch your show, what I take that to mean is they're browsing on their Facebook and they see it for a second. And they're nice to tell me and to make me think that they watch. But I want to focus on viewership, and I feel like we need to go after an audience that is more hip, more younger. That's a bad word. I can't really. That's some of my employment law friends would scorn on me. They would frown on me using that word. We'll just say more hip, right? More into it. And I wanted to bring a guest. My guest today. Now there's a lot of lawyers who, I don't know. I spend a lot of time, I think, simplifying things, which is very easy for me to do because I think very simply, and so it's not in my nature to really be overcomplicated anyway. I'm a simple being. But every once in a while in the legal world, you have to drink from a fire hose. Okay? You have to talk to a lawyer who just blows your doors off, who just is to call her a fountain of knowledge. It's more like a fire hose of knowledge. And today we've got a lawyer who I've known for a long time, somebody who I've considered to be a mentor. But my co-counsel today is Maxine Aaronson, and Maxine is a board-certified tax lawyer. So we're going to be talking about taxes today, which, again, kind of circling back, is my goal, again, is to get a cool audience, an audience that's like, yes, let me drink from this fire hose. That's why Maxine is here today. She's here for you, and she's here for us, and she will impart on us as much tax law practice and information as can be bestowed on an audience for 56 minutes and 30 seconds, which is what I think we have left today. So with that, I'm going to introduce my very special guest today, attorney Maxine Aaronson. That's you.
Thank you, Jeremy. I hope you didn't scare everybody off. You know, when you say the word tax, a lot of people run and hide.
Well, let me stop you, Maxine. By everybody, that's two people. So if I scared them off, that's fine.
Oh, I don't know about that. You know, tax isn't really that difficult when you know all the rules. And I think that's part of what we want to talk about today is, when do you get somebody involved that helps you? Because you can't know everything. I would be as lost in a criminal courtroom trying a drug case as you probably are when you talk tax. And the practice has gotten so specialized over the 41 years that I've been in practice that, quite frankly, even being a general tax practitioner is difficult. And that's what I do. I'm a generalist in the tax bar, but I have lots of colleagues that focus in one small section of the code. Talking to them really is drinking from a fire hose.
Well, okay, so I want everybody to understand this, and I'm going to show the camera these things. So every week I prepare an outline for my guest, because my guests are good enough to give us their time, their valuable time, and they are good enough to talk with me and to indulge me and to put up with some of my shtick. And so the last thing I want to do is be to my guest like, here's extra homework. Here, make an outline for me and do more work, for me, for free, for my show, for my thing. And so I generally will draft a basic outline, which I admit is typically going to be incomplete for the reason that I'm not a tax lawyer or an employment lawyer or a construction lawyer or whatever type of guest I've typically had on. So I'm just going to show this. This is my outline for Maxine that I typed up and I sent her, and Maxine typed and sent back 3 full pages. Okay. Exhibit A, Exhibit B, demonstrative aids. And so, yes, so you say that other of your colleagues are like drinking from a fire hose, Maxine. You're pretty good at this.
Well, I tried, Jeremy. Honestly, everybody works in a different way. Everybody approaches problems in a different way. And for me, sitting down and trying to write out that outline and help me organize my thoughts, so that worked for me. Everybody's different.
Okay. Okay. So you talked a little bit about you talked about the different types of specializations within tax, and you characterized yourself as a general tax practitioner. So describe that for our audience. Tell us what a general tax practitioner will do as compared to somebody who even specializes in a more hyper specialized area.
Well, I have friends and colleagues, for example, that do nothing but what we call transfer pricing cases. Those are setting the prices in international tax cases when a company sells to its subsidiary so that the tax doesn't get shifted from one area to another. I have friends that do nothing but real estate partnership deals. I know people that do nothing but employee benefits and pension plans. I know people that do nothing but estate planning. I know people that do nothing but criminal tax cases. I do a little bit of all of them. And I do a lot of individual tax planning, individual tax work. And while I'm not as specialized as my colleagues are in those many areas, I'm good at issue spotting. So if I see something that needs to go to somebody that's more sophisticated, I'll send it there. I'll get them associated. We'll work together on it. But the key part is that when you have somebody, if I'm working, for example, with a small business, I may see that they have a basic issue in their estate plan that didn't get addressed, or that they haven't really thought through how they're going to exit the company, what they're going to do when they retire. Do they need a retirement plan? Maybe we could save them some tax dollars, and maybe their CPA has suggested some simple tax savings with the retirement programs, but I may know some more sophisticated ways to do that and to set that up, particularly in law firms, where we can get more bang for the buck for the owners, which is always the goal in a retirement plan program. Sometimes I work on audits. Sometimes I work on reviewing a sophisticated or a complicated return. I don't do generally tax returns. Some excise tax returns, estate and gift tax returns, those are done by lawyers. But generally speaking, income tax returns, we let the CPAs do those. They're much better at it. They're cheaper, often a third of my hourly rate to do the work. And you don't serve a client unless you put a team together that handles it in a cost-effective manner. So that's kind of what I do. If it's tax, bring it to me. If it's something I think needs to go to somebody who's super specialized, I'll help you find that person. But most of the time I can solve it. Um, After 41 years, I've seen a lot of things. I've done a lot of things. Uh, and it's common for me to come back and do them again.
You have such an amazing, I mean, the times I've talked to you, I mean, again, when I talk about drinking out of a fire hose, I will present to you, and you have given me tons of advice over the years. Partnership agreements in writing, right? Malpractice insurance, basic stuff, right? That's not tax specialized, but even when I was building my house, okay, I remember that I told you that we were building a house and that we were shopping banks to do that. And then I suggested to go to the bank that all my accounts were in, and you went, no, don't do that. They're going to cross collateralize your loan. And so it's just little, and I'm like, oh yeah, which in English for everybody means that if I'm late on my payments, right, that the bank just says, well, thanks, Jeremy, we're just going to tap your other accounts for all this stuff. And if I have a dispute with them, I've got no leverage. But these are the things that you've kind of picked up along the way. But okay, so
that's general business advice.
But I didn't know it.
Well, but that's because you're a criminal lawyer. And a darn good one.
Oh, that's why you're here too. Again, because flattery is very, very important and very welcome. That was an unwritten, unspoken understanding about coming on today, was that there would be a lot of this. Okay, what's the difference between a CPA and a tax lawyer?
CPAs do returns. Routine, everyday income tax returns. Tax lawyers don't do that. CPAs deal in numbers. I sometimes say CPAs deal in numbers and lawyers deal in words. Mm-hmm. The difference is if I can give the work to a CPA, it's going to be cheaper for the client, and I'll drop it down there. I have a lot of good CPAs I work with. A lot of them send me work, but sometimes there are things that just really take a lawyer's point of view. There are places in the code, the Internal Revenue Code, that have facts and circumstances determinations. You have to read the regulations, you have to read the cases, you have to look at the client's facts, and you have to apply that law to the facts. Those cases take a tax lawyer. Mm-hmm. CPAs aren't really good at that. They're not trained at that. They don't know that you have to follow Fifth Circuit law and that the Fifth Circuit rules when you're in Texas, as opposed to a fabulous case that might be out of California in the Ninth Circuit, but which isn't the law here in Texas. And if you've got a Texas client, that Ninth Circuit case isn't going to help you. Lawyers know those things. Mm-hmm. CPAs generally don't. They haven't had evidence.
So you're talking about the difference between, I guess, big picture or 40,000-foot view versus this is a tax return. In other words, you've got, when you're reviewing something, or a complex set of taxes or returns or whatever type of estate plan or whatever, you're thinking of tripwires for the client in other areas. Also, if we have to go to tax court, here's how this is going to look and here's how this is going to work. Whereas the CPA is just the numbers. Is that, am I characterizing that correctly?
A little bit. The CPA is also worried about making sure that the return gets, if it gets audited, it gets sustained, but they are dealing in more black and white issues, and some issues are black and white and some issues are not. Let me give you two examples where you probably always want to have an attorney involved. Mm-hmm. One is if you're buying or selling a business, a CPA will give you great advice about the financial side, whether it's a good price, whether what you can expect in terms of future cash flow from the business. but they're not going to see the issues in the deal documents that lawyers look for that are business transactions. There are a lot of things on earnouts, for example, that can be negotiated. There are a lot of things in terms of whether or not you carry a note and the reps and warranties that can be negotiated. And quite frankly, CPAs can't draft documents.
Mm-hmm.
So you need somebody that can draft those documents if you're buying or selling a business, because the CPA can't do that for you. It's the practice of law to draft documents. It's not the practice of accounting.
Mm-hmm.
So when you're buying and selling a business, you always want to have a good business lawyer, maybe a tax lawyer with business expertise. Take a look at the documents. I can think of a couple of specific examples where I insisted on some changes with good business lawyers. One in an earnout where we very specifically provided on my advice that if the company was sold before the earnout was paid, that they had to keep it as a separate entity. And that's because I knew from experience that if they didn't, it would be impossible to document, and that general and administrative costs from some other parts of the business might get shoved in and it would affect the ownership. So they kept telling us that they weren't going to sell the company, they were going to keep it, et cetera, and we didn't need to worry about it. And of course, I'm stubborn. So I said, great, if we don't have to worry about it, put it in. 9 months later, we closed the deal. 9 months later, guess what? They sold the company. And the earnout wasn't paid, and they wanted to roll up that subsidiary into another company. And the business lawyer sent me a very nice email thanking me for telling him, because it gave him the leverage to say, well, you can do that as soon as you pay out the full amount of the earnout. Otherwise, you're going to keep this company separate until we hit the earnout numbers. And the client's got a very nice payday, a couple of years early, actually. And then the company was able to roll it up because they paid off the earnout. In another case, somebody had agreed before they called me that they would take a second note because the person couldn't finance the whole purchase of their business. I wasn't really happy about it, but it was the deal they'd made. In that case, we didn't have a business lawyer. It was a neighbor of mine. And I was just trying to help her out. And I just insisted that the note would be due if somebody refinanced the first note, that they would have to refinance both together. About 6 months later, the buyer came in and put some papers under her nose and told her just sign them so he could get his note refinanced. And she sent them to me to look at because she didn't understand them. And I said, he has to refinance you too if he's refinancing the first note. And she got cashed out, which is good because you never really want to carry a note for somebody if you're selling the business. You know, if you're selling your business, Jeremy, when and if you decide you want to sell your law practice, you're not a bank. And if the bank won't lend the money, you really need to give a lot of thought to whether or not you want to.
I have no intention of selling my law practice. That said, anybody on there, make me an offer. Anybody in Facebook land, I'll listen to anything. You hit me with a bunch of zeros, and you never know what I'm going to do. Right? I can work on my putting and chipping, and we've got some problems with our mid-iron game, but yeah. You're watching JP, Kathy, and the Crew. You can watch JP, Kathy, and the Crew between 7:30 and 9, Monday, Wednesday, Friday. This is The Lawyer Show. We are on Thursdays between noon and 1. My co-counsel today I'm your lawyer, Jeremy Rosenthal. This is my co-counsel, Maxine Aaronson. Today we're talking about tax. Tell us a few horror stories, Maxine, about CPAs.
I really don't have any. So I can't, but I'd like to go back a little bit to another circumstance where you should always have a lawyer involved.
Oh, yes, please go ahead.
And that's if you have unfiled tax returns, or if when you get the audit notice, you realize there's a very big mistake. I had recently a case with a 7-figure mistake. It
Client's
turned out
mistake or IRS's mistake? Combination?
CPA software mistake.
And I knew that there had to be a horror story with a CPA. A 7-figure
Really,
mistake sounds like
no, it wasn't.
Or maybe 7 figures is not a big deal for. I mean, Maxine, that's why I have you here. You're a big deal. Okay, I'm just gonna put it out there.
It turned out that it was a checkbox.
A checkbox.
That it was an entry error in the software, and it was a checkbox that didn't get properly checked. I wouldn't call it a CPA horror story.
Okay.
The CPA who was involved is very capable.
Well, lawyers, Maxine, we like easy targets, and I just kind of assume that CPAs might be an easy target, but that's okay. We don't. Part of the lawyer show is beating up on people who are not here to defend themselves. It's okay. We don't have to. I'm backtracking, Maxine, and I'm sorry to. Yeah, but go ahead. You were talking about the 7-figure checkbox mistake. Go ahead.
So we actually caught the error before the agent came in, and we told the IRS agent about it, which is something that, it's delicate. You've got to do it carefully. But it was a very complicated area of the code. It is something no client understands. And in fact, when I did the research, I found a bunch of cases where the court had said clients don't understand this section of the code. They rely on their accountants. And if the accountant makes an honest, genuine error, none of us are perfect. You don't blame the client, and the client shouldn't have a penalty as a result. And I was able to persuade actually 2 IRS agents, because they changed agents in the middle of the audit, that this was a benign, honest error, and that the client shouldn't be penalized for it. And we were able to resolve the audit. The client owed the tax. There was no question. They were going to owe the tax sooner or later. It was only a timing issue as to what year that deduction was taken. And it was clearly an input error when I dug into it and I saw it, and we saw the software and we saw the cases. It's a human error. It happens. The question was, what do we do that puts the client in the best situation? And the IRS agreed. They not only didn't impose a penalty on the taxpayer, they did not impose a penalty on the accountant, because they could see how that error, that one checkbox on that software, if you weren't watching for it, could easily happen.
They can penalize an accountant, or they can penalize a tax preparer?
Absolutely, they can penalize a tax preparer. There are special penalties in the code for penalizing a tax preparer. So if you get annoyed with your CPA because they're telling you, oh no, you can't just tell me what you gave to charity, I need to see the receipts, or I need to see the letters you got back thanking you for the gifts, or they say, I need to see the receipts on your childcare expenses. That's because that's a good CPA. Those are people that are concerned about the preparer penalties that are in the Internal Revenue Code. Absolutely, lots of penalties. We represent, tax lawyers represent tax preparers too.
Okay, so that's interesting to me, because that's interesting to me because that would be, in some ways, I know that this is a very imperfect analogy, that'd be like the judge, saying, Jeremy, you're going to go to jail too. The way that you handled this case, you're going to go or pay a fine or be penalized in some way. I suppose it shouldn't be surprising that there's accountability measures in the code that keep tax preparers, but there's nothing, for example, I mean, my guess is there's no way that an attorney representing a taxpayer, I mean, do they draw the line there?
No, I'm a preparer.
If you're
under the code, if I review the return,
if you're acting as a preparer,
I fall under the preparer rules. There's a due diligence issue there. And the truth is, Jeremy, it's no different than if you've got a criminal client and you're talking to them and you know that the story they're telling you doesn't add up. It's impossible. You have an obligation to the court. You can't put that witness on to testify to that.
Well, okay, great point, because the law is very, very peculiar in this. And first off, it takes a very, very exceptional circumstance for that to be triggered, number one. But number two, the client still has the absolute right to testify in their own defense. I have an ethical obligation not to call a witness who I know will perjure themselves. I think what the law says is that I have to allow that client to testify, but basically just indicate to the court that it's going to be in the narrative. In other words, I'm not going to give the client a direct exam, that my client's exercising his right to testify, and then which I mean is all sorts of a red flag, probably to a jury, but absolutely to the judge. And so the client can go up there and kind of say whatever that it is that they're going to say. But yes, I mean, and so we cannot knowingly perpetrate a fraud on the court. We cannot be engaged in criminal activity ourselves. There's a difference between when a client comes into our office, if they come into our office with a bloody hatchet, okay, and they say, where should I put this? Okay, you know, if I answer that question, well, now I'm an accessory, right, to whatever probable criminal offense has been committed. But if they come in and they say something like, I took the axe and I threw it down the well, that's going to be privileged, right? Because in that instance, I haven't done anything to perpetuate or further or give legal advice regarding the continuation of a crime. I have merely been disclosed facts that have all been done in the past, which is a good rule of thumb.
So you said the P word, privilege. I want to talk about that for a minute, if I could, because it harks back to what I said about if there's something unusual or you haven't filed. The Supreme Court said many years ago that the U.S. Supreme Court, the big Supreme Court, that there is no privilege that attaches to the preparation of a tax return. Even if you're an attorney and you prepare a tax return, because you're filing it with the government, you're giving it to the government. So it's not privileged. But and CPAs don't have attorney-client privilege, but if there's a problem, if you sit down and you look at your records because you've got an audit notice and you say, gosh, how did I forget to report this $50,000 legal fee? I didn't put it on this return. If you tell that to a CPA, that CPA can be deposed. They can testify against you. There is no attorney-client privilege. If you tell that to me, there's attorney-client privilege. Now, the IRS will probably find it, but not always. Sometimes it's in a prior year, and the name of the game is to keep them to the year they've said they're going to audit and not expand the audit. There are things you can do without making a misrepresentation. There are things that and if there's a problem, you tell them before they find it, because you always have a better result if you do that.
This is a wonderful, I think, intersection between the type of criminal law that I do, not tax law necessarily, in your practice area, you're watching JP, Kathy, and the Crew Network. You can see JP, Kathy, and the Crew between 7:30 and 9, Monday, Wednesday, Friday. This is the Lawyer Show. We're on between noon and 1 on Thursdays. I'm your lawyer, Jeremy Rosenthal. Co-counsel today is Maxine Aaronson. This is a great difference, okay? One thing when so I'm going to make a big time statement here. Of course, I do a lot of talking to groups and I do lecturing, and I hate, in some ways, I don't know, I kind of feel like every time I say that, it's like, look how many lawyer push-ups I can do, and it's just kind of a big look at me thing, but I do. And one of the topics that I talk a lot about are to lawyers who don't do criminal law. And one of the big things that I always say is, do not assume that the state or the government will learn all of the facts in a case. Do not assume that they don't have a right to discovery. Now, in your world, because there's so many paper trails, because there's so many, because it's so document intensive and money intensive, and they can check bank accounts, and they can check other retirement accounts, and you've got QuickBooks, and you've got all these different cross checks, and you've got receipts. So when somebody comes to me, though, again, and what I tell folks, other lawyers, is, look, we don't have bilateral discovery in criminal cases. That means the prosecutor gives me everything, we give them nothing. Okay, if somebody comes
doesn't work that way in tax.
Well, yeah, exactly. That's the point I'm trying to make, is that it can't really work that way in tax, because they are going to find it. I mean, if they're auditing and if they're being thorough and numbers aren't matching and receipt books aren't matching and there's not a lot of control mechanisms in place, then they are going to catch it. But just the circumstances are so radically different. When a very common scenario that we get in our office is somebody calls and says, I got called by a detective. They think I'm driving a car that was in a hit and run last night. And they called, and they and I was whatever. A lot of times we get answers like, I was so drunk I don't remember what I hit. I don't know if it had a heartbeat or not. You've got to have a very dark sense of humor in our office to kind of get through the day. But the point is that, look, everybody knows that you're the driver, right? But they can't prove it in court. They can't legally put you behind the wheel, not unless you tell them it's you. Now, a civil lawyer is going to think, well, they're going to find that out. But they're not. They can't take your deposition. They can't put you on the witness stand. You have a Fifth Amendment privilege, and any type of photo ID lineup is probably going to be worthless. So look, you keep your mouth shut and they can't prosecute you. They can't put you behind the wheel. Yes, they know it's your house. Yes, the car is registered to you, but that's legally insufficient. But in your instance, you know, what you're saying is the best practice is always to self-disclose when you catch things like that.
Oh, absolutely. The goal in a tax audit, particularly if you've got a client who is in a position of high trust, somebody, a doctor, a lawyer, what I sometimes call a captain of industry, a preacher, a politician, a law enforcement officer, people with jobs like that, you always want to keep the matter civil, not criminal. And the government likes to say, at least in the tax side, that no one is above the law. So what they will chase down for and make a criminal referral on for somebody in one of those high profile jobs is much lower than what they might chase the average citizen for. I'll give you an example. I have a friend who was for many years a prosecutor, tax prosecutor in San Antonio. One day he told me he had taken a plea from somebody over $12,000 of unreported income. Now, I can tell you, I don't think it's any secret that $12,000 of unreported income is generally going to stay civil. They'll send you a bill, they'll hit you with some penalties, but they're not going to send it over to the Criminal Investigation Division of the IRS, except in this case. And I said to him, $12,000, why did why is that on your desk? And he said, oh, the person is a city council member.
Oh, okay.
And the money was a bribe.
Oh,
And they couldn't prove the bribe, but they could prove they got the money and that it wasn't on the person's tax return. And then I'll tell you something you already know, but maybe your listeners don't, which is they'll start squeezing that person to get the person above them. They want them to testify. They'll want them to be a witness so that they can get the person who asked them for the bribe.
so
In
this instance, it's like it sounds almost like the Al Capone deal, right? Isn't that what happened?
That's exactly how they got Al Capone. They couldn't prove the criminal, but they proved the tax.
And they did that. And they did that by if you watch the Untouchables, right? They got the ledger and the bookkeeper, and it was the one tax guy who's going through it and going, he hasn't paid tax on any of this stuff, and they're waiting for the Royal Canadian Mount. Have you seen it? It's been a bit since I've seen it. Kevin Costner, The Untouchables? No, maybe.
Been a while, but I'll give you a real good example in the news. If you want to look and see how they're moving forward on the prosecutions or the investigations of the former president, the state of New York, they're looking to the bookkeeper. They're looking to the head financial guy and his son and his son's ex-wife, and they're putting pressure on down there because those people are the people they need to do the testimony.
Okay, here's a question. Okay, so here's a good question for you. And this is the lawyer show, not the politics show. So I don't.
Oh, I understand.
Yeah, but
it's in the news.
Well, yeah, and this is a fascinating question to me, and one that I'm glad you kind of brought this up, and this has kind of triggered my thought process. And I'm sorry because we're going to depart from your 8 pages of outline here, if that's okay. So let's take the former president. Let's take his situation. Now, it goes without saying, my guess is that there's 2 things in my mind, right? In one instance, you have a potential case that you've got a document intensive case where prosecutors tend to have you what they call on a tee, okay? Which is like a golf ball, like you put the tee on the golf ball and then you just hit it as far as you can. And that is because, say, for example, he's got bank loan documents where he is swearing under his signature, this building is worth, we'll just pick a round number, $1 million, right? And then on his income tax statement, it says, oh, no, this building is worth $500,000, right? So
actually, it probably isn't on his income tax statement because the value of your building isn't usually on an income tax statement. I think what they're looking to in those cases is the property tax values.
Okay.
Where you do value them, both the property tax statement and the bank loan, you're correct, were made under penalties of perjury.
Right. But here's what I'm guessing his defense is going to be, okay? If he hires lawyers and pays them and he listens to them, then what his defense may very well be is, look, my stuff is so complicated, I don't know what I sign. They just put it in front of me and they tell me it's right and I sign it. How much of a... Go ahead.
There's a name for that in the tax business. We call that willful blindness, and it doesn't work.
Mm-hmm.
I know some of the former presidents, well, I guess his former tax lawyers now. He has good counsel. They will take good care of him. I don't know his current people, but certainly for the last 10 or 15 years, he's had excellent counsel. And they just recently withdrew and nobody knows why. There's some speculation, but nobody really knows. Mm-hmm. But he certainly has access to good people. And everybody, whether you agree with them or disagree with them, whether they're your political party or not, is entitled to good, competent counsel.
Yes.
I really believe that.
And every time a lawyer gets paid, an angel gets their wings. I am all for. I am. Yes, you are talking to Noah about the flood. Okay, keep going. I'm with you, but you keep going.
But what, there in the tax law, that willful blindness doesn't do it.
But a jury.
They're going to.
So, but you're saying though, and I'm with you. I understand what you're saying about willful blindness. But okay, so a jury would have to convict him, even in tax court, or even it would be a federal prosecution, or potentially he's violated New York state laws, or potentially a prosecution in the state of New York, I'm guessing. So let's say, for argument's sake, that if I'm Donald Trump's lawyer, then what I might do is I might say, folks, you know what? They're playing gotcha here, and his tax return is 117 pages, double-sided.
Jeremy, it's not his tax return.
Or his appraisals.
It's his rendition of the value of the building for property tax issue.
Okay.
For property taxes. So
same difference. But same difference. Well, okay. So but how many properties are listed on there? Each one is a single page.
Separate account for each property.
I mean, I'm just seeing and putting on a prosecutor hat. What I'm worried, that's what I worry about. I worry that if I was prosecuting it, I worry that he's going to get out of this by saying, look, I just signed what they put in front of me. And yeah, I just trust them to give me the right number. I don't know all the appraisals for all my different properties. Now, again, I mean, if you're dealing with an investor who has 4 properties, right? That's a big difference, because that person really ought to know. And maybe they have stuck their head in the sand, right? And willful blindness, and we have that a lot in criminal law too. That's, Louis gives you a bag and tells you to put it in your trunk and to get across the border without getting any attention, and you just don't look in the bag, and that doesn't work, right? I mean, that's willful blindness. That's willful blindness as well. I guess I'm just kind of throwing that out there, because those are some of the questions that I would be asking. That's what I would worry about if I was a prosecutor, is just the volume.
Yeah, of course. And the prosecutors will do their job. And if they don't do the job, he should be acquitted. If they can't make a case, he should be acquitted, whether you like his politics or you dislike his politics. If a prosecutor can't make their case, I mean, that's what a defense lawyer really does, isn't it? You make the prosecutor do their job.
Yes. You make it to where they can't do their job. But yes, I'm with you. And no, your point's extremely well taken. I mean, it's a check and a balance. Everybody in America has their paper graded by somebody. I get my papers graded by judges. My clients grade my papers. When I go to court and I tear up a search warrant, I'm grading in some ways the officer's page, and we all get better by it. They get better at doing their job. My client, whatever result there happens, it happens. Let's talk about, when do you start to get worried about a client? What's worrisome behavior to you, and how can the honest taxpayer sleep at night?
An honest taxpayer has nothing to fear. They should sleep like a baby every night. That's easy. The point at the IRS is to get to the right answer. A lot of people think it's to raise revenue, but it's not. It's to make sure that the law is applied fairly and evenly across the country to everybody. It's, as I say, no one is above the law. So they want to make sure that there's a consistency. And if all of your expenses are documented, you've got all your receipts, or 99% of them, and they're all reasonable and they make sense, and they're, you're not taking all your kids to the Bahamas and writing it off on your business. Believe it or not, I've seen people do that.
Successfully?
Pardon?
Successfully?
No, not successfully, but I found it in the QuickBooks. And usually the CPAs find that, and they take it out and they book it to the owner draw, which is where it should be. And And the client may think they got away with it, but they don't. But, with closely held businesses, finding personal expenses mixed in on the office accounts is pretty common. And the IRS agents know to look for it. So it's where they start. But if they're really business expenses and they're really business trips, if you go to a bar association meeting, an ABA meeting, or a criminal bar association meeting, and you deduct those expenses, that's not going to be a problem. It's there for that. You're supposed to pay, you're supposed to pay for that, and it's a legitimate expense. But what worries me about a client is when a client doesn't take my advice, when I tell them that I think we've got a problem, and they start telling me what they've read on the internet. Because believe it or not, and I know this is going to be shocking to you, but not everything you read on the internet is true.
Unless it's on my blog.
There are a lot of people who sell what we call a product, a tax product. They'll tell you, oh, if you do this, you can save all this money, and they'll sell you a package of documents. They're promoters. And 99 times out of 100, the product doesn't work. And the one time it does work, they don't implement it correctly. I've seen some very, very sophisticated schemes, particularly in the retirement plan area, where people just sell the package of documents off the internet, and they're not set up properly, and they've been a disaster. And then when you tell the client you've got all these problems, they say, how could I have all these problems? This is so simple. I paid this guy $5,000 for this plan, and I signed where he told me to sign. And why do I not get all these tax benefits? Those clients worry me.
I try to keep people off the internet for their own mental health, because a lot of and this may be different areas too, because you've got actually folks who are like you're saying, selling this software or selling documents or selling whatever that's kind of cookie cutter, one size fit all. And like you said, 99 times out of 100 it's not used right, or they don't work, or when it does work they don't implement it correctly. I keep people off the internet because when they get online, a lot of lawyers try to sell fear. A lot of lawyers try to make it sound like if you get arrested in Texas, you're going to get your arm chopped off, which only happens really, frankly, west of Midland and north of El Paso. So very rare does something like that happen. But people will unnerve themselves when they go on to Dr. Google. So that's a very interesting point too. But I do imagine you probably get a lot of folks who do come in and try to tell you how the cow ate the cabbage, and so that's, and is that indicative to you of other issues that they may have across the board?
Sometimes it's indicative of a law license.
Mm-hmm. So okay.
I have a lot of lawyer clients, and
Okay.
Usually, and in one instance, I had a judge for a client who had tax issues, and many, many years ago, we got it all cleaned up. But at one point, I had to say, Your Honor, with all due respect, if you want to handle this yourself, I'll send the file back to you. But if you want my advice, you need to take it. Mm-hmm. You're paying for it. If you don't like it, you want somebody else to give you advice, go find somebody else. But if you're going to pay for my advice, I need you to follow it. Doctors, too, sometimes think they understand the tax law. And I don't have this problem with engineers. I know other people do. They just see the world differently. But my dad was an engineer, so I know how to relate to an engineer.
Tell me how, because 2/3 of my juries are engineers in Collin County.
They're very literal. Very, very literal. They read something and it's black or white to them. They can't see the facts and circumstances or the judicial gloss. There are things in the Internal Revenue Code that if you lined them up exactly, you would think they would work, and every tax lawyer knows they don't. because you can't. We have something called the step transaction doctrine that says you can't stretch something out in 25 steps that you can't do directly. Lots of things like that. So really what you hire a good tax lawyer for is their gut. I hope mine's pretty good after 41 years. I can look at something and I can say, this just isn't going to work. I mean, we can try it. We'll take it to court, but I think we're going to lose this case. And generally, my gut's right. And most of my colleagues, it's a gut level reaction when you look at something and you think that shouldn't be the answer.
You're watching JP. Maxine, last one. You're watching JP, Kathy, and the Crew Network. You can watch JP, Kathy, and the Crew between 7:30 and 9, Monday, Wednesday, Friday. This is the Lawyer Show. We're on between noon and 1 on Thursdays. I'm your lawyer, Jeremy Rosenthal. Today, my co-counsel is tax lawyer Maxine Aaronson. Okay, Maxine, let's finish up with this because I promised everybody your demonstration of how a fire hose works from a legal standpoint. Let's talk about retirement plans, do's and don'ts, what's hot, what's not. We've got about 10 minutes left, so I will let you fire away on what you think everybody ought to know about their retirement plans, business owners, individuals, folks who have 401ks. What are tax hotspots, and what should folks be watching out for?
Well, first, I think they should watch out for what we call prohibited transactions with themselves. So you don't want to have, your retirement plan can't borrow money from your law firm or vice versa. Probably the single biggest mistake I see on 401ks is that the employer doesn't send the money over fast enough to the employee's accounts. They take it out of the payroll and it should go the same day. There is a regulation that purportedly says 15 days, but what everybody needs to know is the Department of Labor says no, that's not fast enough, that they think you've got a problem and you've got an illegal borrowing from the employee's account. They consider that a loan, even if it's for 15 days, if you don't send it over by the time your payroll tax deposit is due. It, usually 3 or 4 days, that's it. I tell my clients, if you are withholding 401k money, when you take that check out and when you take that money out and you take the deposit, the taxes out, they should all go out of the firm's bank account the same day to the various places, to the 401k, to the tax deposits, get it gone. It's the safest way to do it. What if you got stuck in a long trial and you didn't get it over there? The Department of Labor actually audits on that issue fairly regularly. I know a lot of people don't expect that, but they do. That's probably the biggest problem I see. It's expensive to fix, not because the penalties are so high, but because the darn tax return you got to file to fix it, and the calculation will cost you a fair amount of my time to do it. Again, that's an excise tax. That's the kind of work I do versus the CPAs. I've never seen a CPA that knows how to make that calculation. But, and it has to be cleaned up because it keeps compounding if it doesn't. Hot issues, cryptocurrency.
Yeah, I was going to ask you about cryptocurrency. Go ahead.
Cryptocurrency is like anything else. If it has value, it's taxable. If you trade it for a different kind of cryptocurrency, it's a taxable event. It's a realizing event. The IRS has taken the position that hard forks are a taxable event. There's some debate about that, but they're looking. You'll notice on your tax return now that there's a question: have you sold any cryptocurrency this year, or used it? You take it out of the account and spend it. It's realized. Mm-hmm. It's like barter. People think, oh, I didn't pay money for this. I handled a tax matter for you and you painted my house. Well, that's taxable.
Mm-hmm.
Always been taxable.
Value that you're
So
receiving.
that's right.
Mm-hmm.
So cryptocurrency is a hot issue. Um, there's a question as to whether or not they're going to require it to be reported to FinCEN through the Bank Secrecy Act reporting requirements. I think we'll see some debate about that. That's coming. I think we can all expect, because the government has promised us, to see increased audits of S corporations and partnerships. They're gearing up on that. They're training their people to do that. I think we'll see some changes on the international tax side that will be tied into the Biden tax proposals, because the corporate tax rate is really all about an international global inequities. If you can do business in a country that's taxing you at 5 or 15%, why would you do business in the US at 35%? If you can move that business. And if you move that business, you very often, to get those very low rates, have to move jobs. And so, that's a global competitiveness issue. If you're interested in following it, watch Janet Yellen. She's very smart, the new Treasury Secretary. She absolutely gets it on this issue. And the Organization for Economic Cooperation and Development is also working on this issue from an international, multinational level. I think we're going to see, as the commissioner has promised, a lot of increased audits and enforcement for people that are making six figures, mid six figures and higher. There are a lot of people who pay their taxes or file their returns, admit they owe the tax, and just haven't paid it. And I think we're going to see a big step up in that area. Again, the goal with those taxpayers is going to be to keep it civil, to find a sustainable way to get it paid, to get them to address it. Taxpayers that make that kind of money think they understand the system, but the IRS's system and their rules for what they can and cannot do are different than a bank's.
Can I ask you a question? Can I stop?
Sure.
Because you're kind of how long is the tax? How long are you guys going to be dealing with COVID, with the ramifications, with all the changes, with all the stimulus, with all the deadlines that get shifted around? How much of a nightmare is this going to be, and how are you going to be working on tax returns or audits or enforcement actions or anything in 2025, 2026, 2027 that are still related to COVID?
I think probably, because there, statutes of limitations get extended. There was a statute of limitation that got extended as part of the COVID legislation, both in the Trump administration and then again in the Biden administration. When they extend the time that you can file your return, it changes all your calculations. So the software that we use to calculate how long the IRS has to audit or how long they have to collect, a lot of those things changed because of the underlying statute of limitation being extended. So I think we're going to be dealing with it for a decade. There are a lot of different rules out there, and it's just something, one more thing you just got to watch out for and remember to check.
Mm-hmm. The Social Security cap, you were saying in your outline, the amount of wages cap has been.
I think that's going to happen. Here's why. The Social Security Trust Fund is expected to start running out of money in 2035. It's 2021 already. And Congress keeps kicking the ball down the road and not wanting to address it. But if they remove, right now they tax every dollar you make for Medicare tax. not the pass through from your S corporation or your partnership, but wages. They tax it all, but they're only taxing the first $142,800 of your wages. So if you're making 200,000, you've got, $58,000 of untaxed income that doesn't get that 6.7% Social Security tax. And it's outside the wage base. The number's pretty big if they take that cap away. And it will solve a big portion of the Social Security wage base, the Social Security trust fund problems. So everybody has known for a long time that that is probably the solution. The question is, who has the intestinal fortitude to take it to Congress and do it? And this administration might.
Okay.
They've been talking about it.
It sounds like scary politics to elected folks.
Well, it is, but having the trust fund run out of money in 2035 and have to cut people's Social Security checks.
Well, yeah, but that's your problem. That's somebody else's problem. No, I'm kidding. Of course it's not. But
well, no, that's
what they say.
You're right.
Yeah,
it's a problem down the road, and I won't be in office. And honestly, our elected officials need to gut up and do the job we elected them to do. It's not always easy to solve the problems, but sometimes you have to. Now, they did fix some of the issues in the chain CPI a few years back. That gave them a couple of years more. In
English, chain CPI.
How they calculate the cost of living increase, they were calculating it in a manner that was actually in excess of the actual cost of living. It was too generous. So when they gave people a cost of living increase in Social Security, they were giving them more than the cost of goods and services had gone up. Does that make sense?
It makes perfect sense. And I promised our viewers, I promised our audience explosions, fight scenes, chases,
sorry,
fire hose. No, this is everything that I bargained for and more. And so look, Maxine, it is always a delight. You are a mentor to me and so many other lawyers. You are a great teacher. You are a great storyteller. And it is my privilege and honor to have had you on this hour. So thank you. Thank you for being here today. Thank you for letting me call you my co-counsel, which you may tell me afterwards. I don't know. That does it
Always a pleasure to work with you, Jeremy. I've enjoyed this.
Thank you, Maxine, as have I. And I'm sure that Lawyer Show Nation has as well. But we're going to go ahead and sign off, and we'll see you again next week. Thank you.